Hello trader. Well, in this video I'm going to take you through an SMC entry model that is very easy to understand and works out each and every time. Okay, this particular entry model repeats itself each and every day. Okay, so with this type of entry model you're going to get a good risk reward ratio. Okay, the win rate is very high. Okay, so I'll just take you through what you need to consider before making an entry, and you are good to use the strategy. Okay, so with that said, I'd like now to start the video. Okay, make sure to like and subscribe, okay, to the channel for more of such content I post each and every day. Okay, yes, so now with that said, all you need to do is ensure that price taps into a higher time frame zone. Okay, could be the demand zone or a supply zone on a higher time frame, whereby the higher time frame depends on your trading strategy. You could use the 1 hour, you could use the 4 hour as your higher time frame, or as well also if you're a scalper you can use even the 15 minutes as your higher time frame. So now once price taps into your higher time frame area, okay, which is the demand or the supply, now you will identify that first breakout structure to the opposite side. Okay, now once that is done, again you identify a significant demand area on that particular leg that takes out the breakout structure, and with that done, now identify the liquidity. Okay, so you will need to have at least 2 breakout structures for this particular entry model to be perfect. Okay, so the first one gives you directional bias. Okay, then the second one, the second breakout structure, will give you that liquidity that you need in order for you to make an entry. Okay, and then below that liquidity you will have to identify an FVG. Okay, fair value gap. Okay, this is where price moves aggressively and leaves behind an unmitigated zone. Okay, that is what is known as the fair value gap. So once you have your double breakout structure right there, you have your liquidity and you have your fair value gap, go ahead and identify a demand area. Okay, identify a particular zone of price whereby it's the nearest to the liquidity level. Okay, once you've done that, you are going to be able now to plot it out perfectly and make your entry. Okay, for a double confirmation you could as well proceed to a much lower time frame to get precise and sniper entries. Okay, you could use the 1 minute or the 5 minutes for your entries according to your trading module. Okay, so with all that put in consideration, you will be able to make your entry and target the last breakout structure, and that one will give you a good risk reward ratio. Okay, and this works for both the buys and the sells. Okay, if it is on the opposite side, when you flip it around, when you are in a trending market to the upside and then you get a downward sell option, you just ensure that you have these particular models in place. Okay, just get that breakout structure, identify your liquidity, and plot your fair value gap. Once you've plotted your fair value gap, identify that order block where price is nearest to the liquidity. Okay, so with that said, I'd like now to show you how it looks in a real chart. Okay, so in a real chart, this particular entry model looks like this. Okay, you get that breakout structure and the price reacts from a higher time frame point of interest. Okay, so once price reacts from a higher time frame point of interest, you get that first breakout structure. Okay, and again you get a second BOS right there. You get that second BOS. Okay, a second BOS, which now will give you the liquidity that you need. Okay, you can see that second BOS gave us that liquidity that we need. Okay, and below that liquidity, identify a fair value gap. You can see that is the unfilled candle of price. Okay, price moved aggressively, leaving behind a gap which is unmitigated. Okay, so after identifying a fair value gap below your liquidity level, go ahead and identify a zone, okay, order block. Okay, so now this is my order block in this scenario, bullish order block. Once you've identified your order block, you can proceed, make your entry, and put your stops right below the order block, and your entry right above the order block. Okay, as you can see in my scenario right here. Okay, let me make it visible. Okay, let me increase the opacity of the tool. Okay, so you can see that let me just a moment. Okay, so with that in mind, okay, you can see it's quite a clean entry. You enter and price moves in your direction. So the best option to do is always enter and target the previous high. Okay, you can see this was a good 1:3 risk reward ratio. Okay, identify higher time frame POI, get to the first break of structure, identify the fair value gap, get the order block, and on the second break of structure, get to identify your liquidity level. Once liquidity is taken, the price taps into your order block, make your entry, target the previous high. Okay, you can see that was a win for that entry. Okay, again on that very day, you can see price gave us another entry model. Okay, so you can see price broke higher, another break of structure. On breaking that high, you identify liquidity, which was right here, liquidity, and once liquidity was made, identify another block for price to come back into. Okay, once price retraces back into the zone, move to a lower time frame, which could be the 1 minute, 5 minutes, or the 15 minutes, depending on how you trade. Okay, once that is done, enter on the order block, target the buy side or the sell side liquidity or the previous high. Okay, like in this scenario, you can see this one was a good 1:4 risk reward ratio. You can see how the strategy is very simple and straightforward. You don't have to complicate anything. In case you have any other questions, feel most welcome to comment down in the comment section. Let me know what type of question it is, and I will get back to you and give you a response. Okay, keep trading simple, guys. Never complicate the game. Identify your breakout structure, fair value gap, liquidity, and order block. Make your entries, target the previous high, previous low, make your money, get out of the market, enjoy your money. See you in my next video. I make such content on forex analysis, and see you in my next video.